Good morning, everyone, and welcome to the Morning Edge. As the note indicates, in case anybody's missed it earlier in the week, Blake is out for the entire week. He's on vacation with his family to Disney. So he'll be returning back on Monday, so I'm just doing the best I can to go in and fill in for him. As we do, at least I'm pretty much following as far as the breaks as he does for the time, like every half hour, catch about 5 or 6 minutes. But we start off by, kind of looking at what the theme of the news is, mention any markets that happen to be moving at the moment, and then we see what's on the agenda as far as economic reports, and then from there we go into the charts, primarily covering the majors. And Amanda says, good morning, Amanda. Then we take a look at gold. Also bonds, then we come back, and then we cover the cross rates, and then we usually finish up with the SPOOs. So we'll go and take a look. Obviously, what's moving overnight has been the dollar. The euro dollar has continued to move lower, even lower than what I thought. I mean, I was looking at some support around the 1033 area, because this reminds me exactly how the market was. We were in this area at FOMC time in July, and the market was trading in just above the 10 or about 10.12ish. Then it would drop and go sub 9, and on the way higher, that's what we broke out of. And I shared that yesterday about the 1043 being the bias pivot, and after the FOMC, when we got above 1043, I was looking for at least a pullback to 1032, and that's where I came up with this 1033, and then below that 1017. Now, 1005 is pretty key, because leading into that, when we were sub 1010, we bounced up several times against the 1005, 1007. Now, we've come down to the 1017, and I noted to some guys in the chat room, we've seen a little bit of divergence, because I was talking about the 1017. There's an opportunity there, and but at the time the Swissy was still trying to push higher. But we've seen a little bit of a divergence here in the Swissy. We've gotten up to 99.04. We're backing down a little bit. We'll have to see, and we'll go into a little bit further depth about the euro as far as price structure. I've stuck to my guns over the last almost 3 weeks, and I reposted my blog post from last FOMC. I still expect the euro to get to 107 by December. Probably sounded crazy about a week ago, maybe even more so 2 weeks ago, but I still stick to my guns. I still think they're going to see 107 by December. Obviously, it's starting to look like we're starting to turn that way. So we'll go on and get into the news. And obviously, cable continues to take a pretty good beating. It came to a level that we were talking about yesterday, so we'll get into that. We'll pop into this. Obviously, the big story of the day is going to be the FOMC minutes, which most expect to be hawkish, which you really had to look that way because we had dissenters. So, Yellen was able to keep everybody on the reservation, but we certainly had some disgruntled members. So you would expect it to be, somewhat hawkish. But anyway, Sterling trims gains after Prime Minister spokesman says there will be no Article 50 vote. Sterling trimmed some of his gains on Wednesday after a spokesman or spokeswoman for a British Prime Minister said there will be no vote in Parliament on triggering Article 50, which will start the formal process to take Britain out of the EU. There will be no vote on triggering Article 50, Theresa May's spokeswoman said. May said she will trigger Article 50 by the end of March next year. Sterling fell to 22.40 on the news, down from 22.70 beforehand, before we come to 22.65. Against the euro, sterling firmed up to 90 pence. We can take a look at the euro pound later on. It's not a market that I trade, but I generally will keep an eye on it to get an idea of where the euro is as far as any kind of resistance. I haven't bothered looking at it recently because with everything that's going on with the Brexit, those things, you can keep on running for a little while on that. obviously the one market that I look at a lot to give me a determination, give me an idea of where the euro may be running into a little bit of trouble when it comes into a level or two, is I look at the dollar Swiss. And we'll get to the dollar Swiss, and I just mentioned about a little bit of a divergence we've seen. So we'll get in regarding the Aussie dollar and the Kiwi. Aussie dollar firm on sturdy bond demand, Kiwi near 2.5-month lows. You know that we've been talking about the head and shoulders on the Kiwi, and we'll get to that. We'll get to the charts. Says the Australian dollar inched up from a 3-month low on Wednesday, boosted by strong demand from investors for a long-term government bond sale and the sign of solid appetite for the country's high-yielding assets. You know that the Australian dollar does have, with everybody's chase for yield, it's certainly a market or a bond market that's always going to have good demand. But anyway, it says, but local settlement got a flip as books closed for the Australian government's new 2047 bond, which bids in excess of $13 billion. That blew away expectations of bids totaling around $2 billion. Well, just what I was saying, which I hadn't even read the story, but the Aussie bonds are always going to be, they've been in demand because they yield so well. But anyway, it says Australia, one of only a dozen countries rated AAA by S&P and Moody's, has $443 billion, that's Australian dollars, of bonds on issue. Around 60% of the debt is in the hands of international holders. While the Aussie ran past the chart resistance at 75.60, analysts were wary ahead of the minutes of the Fed's September meeting, due later in the day. Whilst we remain dubious of any solid gain on odd, we would think it would remain supported over the 75 US cents following the minutes, says Man Simpson, senior analyst at Think Markets. Also helping the rebound in sterling after dramatic losses in the previous session. The pound benefited from a Bloomberg report that Theresa May has accepted that Parliament should be allowed to vote on the Brexit plan. So we're saying this now, it should be allowed. I would think this has a lot to do with the currency valuation. So obviously, as the pound goes into the toilet, Theresa may not be necessarily changing her mind, but she may want to slow down the flushing of the pound. So once again, as it said here, the pound benefited from a Bloomberg report that Prime Minister May has accepted. Now, I just showed the other one that says that she was like, no vote. Has accepted that Parliament should be allowed to vote on her Brexit plan. So, once again, doing a little bit of adjustment there, not wanting to see the, cable completely fall apart. Because, once again, we get past 120, then the next logical target is going to be 115, and then you're talking about exploding inflation. Maybe not exploding, but certainly inflation will be taken off. And the problems that the UK went through a few decades ago, and if you saw, which was a very good, you could see that on YouTube. You can go on and put the search Black Tuesday, the Bank of England. That's when George Soros took over the Bank of England. And one of the problems that they're having is because inflation was taken off. So you can see here that she's kind of jiggering her thoughts on this. So let's go in and move into what's on the news for today. And just a moment. I think this is a little bit off too because it's not showing the FOMC minutes, which obviously going to go and play out. But still relatively quiet as far as reports. So we're going to move into the charts. Yeah, Nick says, hi, Polly. Report last night on the UK news channel about food inflation, examples of a 20% price increase on market stalls already. Yeah, those things are going to come. I mean, that's what I was saying is, before the cable, my thoughts, like I said last week, I thought 126 is as good as it gets. And we're going to move into the charts right now. And I had that discussion with Blake. And one of the reasons I like to cover the news is to provide the tone of the market. So last week, I'm like, 126 is as good as it gets. That's as good as it gets. And then I had the discussion with Blake. I discussed it on the European crossover before Blake came on. I discussed it with him. I said, you know what, got a little bit of a worry here. And I go, Reuters posted the story. And, because that weekend they're talking about, the hard Brexit. And it was coming off of the, where May had said, they're going to go on and invoke Article 50 by no later than the end of March. But the point was, and when I had that discussion with him, that was on Tuesday, I believe it was, I said, hey, look, I go, she's ratcheting in, she continued to ratchet up the rhetoric. Forget saying about the Article 50 going to take place in March. She's ratcheting up the rhetoric. And I was saying, hey, look, you know what? If she doesn't slow down on this, because the story was basically saying, it's getting a little bit worse and people are getting concerned, and if it could really turn things really bearish on the cable. So I was telling Blake, I go, hey, look, she's, I've been saying 126, but I tell you what, if she doesn't ratchet down this rhetoric in the next 2 to 3 weeks, we could get down to, and I thought worst case would be like, the 123 area. But I said, yeah, we can get past that. And then, so I had that discussion with him. And then later that day, sterling just starts to sell off. And then obviously we went to the Asian session and the wheels fell off the caboose. But it sounds like she's starting to turn things, adjust her views a little bit. But anyway, let's go and get in here to the euro. And here's that 1043 bias pivot I was talking about yesterday. And as I mentioned before, we were talking about that just a little while ago. This was into the FOMC back in July. And let me see, Eric says, Dudley and George are both speaking this morning. Well, I mean, it really doesn't matter what they say at this point because it's all about the FOMC minutes. So here's the only thing, is if they sound a little bit more hawkish, then the market, which already appears to believe, if you look at the euro, as the euro has fallen into the toilet, it already expects the FOMC minutes to be bearish. So all they'd be doing is it would probably just basically validate where the market already is. That's no news. I don't think so. It's no news at this point because the news is the FOMC minutes. And we had dissenters, so you already expect it to be as they're on the cusp of raising. They're not going to say what was in the FOMC minutes, so they're just going to say, we're getting closer, we're getting closer. All that does is validate this move. That doesn't do anything. You see what I'm saying? I could be wrong, but I don't see anything that they're going to say that's going to send the euro going even further down, unless they say, I said this in the minute, at the meeting. And it really spooks the market a little bit more, but come on. I mean, if the market was here, then what they were going to say would mean something. After the market has fallen here, and you think what they're going to say means something today? No. What they say is not going to mean anything today. The market's already fallen off. If the market was here, you have to look at things in perspective. If the market was here, then what they would say today would mean something. The market already expects a more hawkish tone to the FOMC minutes. So what are they going to say now? Unless they say, this is exactly what I said in the meeting, and they're not going to say that. Then we could drop lower. All this has done is validate. If they were to say something, it just validates what the market already expects. You have to look at things in perspective. We're seeing a little bit of a bounce here at the euro. As I told you, I was telling the guys in the chat room, I like that 1017. 1017, when I got short, I was shorting in July in the FOMC in that same day. And we're just shorting back and forth here. And as we blew higher, I remember getting short here, I think it was like 1042 or 1044. And I told the guys, if we get a 2-hour close of 1048, it's bullish, which is like, hey, stupid, why are you trying to still short it? Because I thought we'd come back. On the way back, and I think the low was only like 1037 at that point, 1036. I thought the initial level was going to be 1033, and my best case scenario was 1017 with a like right around 1015-ish. That's where I wanted to cover, because I thought we'd come back down and then we'd see if we could go and hold it. So if you look, and I'll move us into a shorter range on the euro. That's why these levels matter. Like I said, I want to keep on sticking on that same tone. The one guy that was giving me a hard time about all my levels. What you don't understand is the market doesn't ever forget its levels. Okay? So you see here, here's at 1048. On the way back after the market broke higher, it ran out of gas at 12. I'm not talking right now. I'm talking post FOMC. It ran out of gas at 1236, which was a 61% of the move. And then it came back. The market eventually bottomed at 1046. Now, don't forget the bias pivot was 1043. Now, when I shorted that time, I was looking for 1033. Guess where the market stopped? In Asia. 1033. I mean, it got to, it looks like 1032, but that's where it stopped, the 1033. Notice the rally from 1033. Not bad, 30 pips right there if you're scalping. Now, I wasn't awake during this time, but I had an order, and I was covering right down there, and I got out. Now, I thought we might even see a better rebound, and I would have been happy to short against 1074, but it did run out of gas here and started to pull back. I told the guys in chat room, I go, I like this 1017. I go, well, I didn't say I like it. I said 1017 presents an opportunity. Guess what this was? Ba-boom. 1017. You see it right there? Right there. 1017. Right there. I remember this from FOMC day in July. Because that's where, when I short, I said, okay, we may be able to get it down to the 1017, 1015 area. Now, if you were to look at where we are now and post that area, I've got 1007 marked off. Let's see if we can go all the way back there. Let's see. Okay. 16. Okay, trying to back it up a little bit. Okay. And there we are on FOMC day. Notice how many times the market was bumping up against this 1005. You see that? I'm going to pull this back up here. Now, I like the 1017, but here was some forays that we had up in here. But look, how many times at the market 1005 area, 07 was pretty huge. This is on a 15-minute chart, but notice how the market came back, and then it used it as support. And this on 26, it got back, used 1005 as support, came back up, 1005 was resistance. We dallied around 978. We made it back up here. We ran out of gas as we came up above to the 10. Came back up to about 1003-ish. Came back up to 1005. We vacillated right here at 1005. Basically, just sitting right here. We came back down. We made another run. This time we made up to about 1007, 1008. Then we came down. Once we were able to blow past there, okay, because actually when we had the number, we dropped down. I think we dropped down to 943. You can see where the market made up to like 1012, and we came back down. Remember, I think the low was like 1089, if I remember correctly. I remember playing it against us, and I think I ended up covering like it. I think I shorted it twice, and then I covered like it at 1002 or something. I remember telling some people, and then I covered like it 1096. I think the market got down to like 1080, 989 or something like that. And so my thoughts were, okay, take a stab at 1042/44. And I thought, okay, the market should be able to make it down to 33 and then eventually down to possibly 15 and 14. That's what I'm talking about, the 1017. So fast forward to here where we are now, you can see the market, it found support at 17, then we dipped a little bit lower, now I'm trying to push a little bit higher. But here's my take on the euro. We've already fallen quite a ways. I mean, we've barely even had a nip of a rally. So we've fallen so far, I'm not sure how much more we're going to fall. The retracement low on FOMC day, I showed you that was 943. There's a ton of support between 988 and 964 on a 2-hour chart, and we'll move back into the 2-hour chart. And we're talking about day trading. Like I said, my focus is more towards day trading and scalping, although this show is not going to be about day trading, scalping per se, but we're coming into a big event, and we're at a point where the euro has really fallen off of the couch pretty hard. So it's like, how much more can you get out of the euro? You see what I'm saying? I think that the euro, as I mentioned yesterday, I think it's at the infancy of a downward move. And I had that blog post. I've been saying for the last 2 weeks, I still expect euro to get down to 107 by December. But I think we're pretty overdone. This 984 to 963 is a pretty good little area. And I'll show you here. We'll back this up a little bit. You see right here, the significance here, we'll back up even further. You see all this play going on? I'm going to highlight this real quick. This is pretty huge. You see that? That's 960, that's 9, what is it? I think it's like 965 or 64 to 980, 988. That 20 pip zone is pretty freaking solid. You see that? This goes all the way back to February. Where did they find support? After this huge move down from essentially 1375, we found some support here at about 965, 64. You see, and it's also resistance here. You see that? See how the market never forgets its levels. Like I said, it probably sound like Joe says, let me see, hang on a moment. No audio issues. Hold on. You know what? Type it here. Hold on. Hang on. Okay, so hopefully Joe sees that and can go in and log back in. So here's the deal. Like I said, this is a very key area on a 2-hour chart. Okay, so on a 2-hour chart. So this whole area is pretty key. Like I said, as I said, after this big old fall, they found support at 965. They took them back up here and bounced, what, 100 pips? Pretty good. As we fell and lost 965, guess what? 965 becomes resistance on the way up. You see what I'm saying? See that? We came back down here, and you can see the battle zone going on here. This whole area is a battle zone. You see that? Now we come here, look, the same area, the battle zone. Look here. Before we hit the bottom, the battle zone. You see? So here's the deal. We've fallen so far that I'm not sure we can go beyond that. I'm here telling you I still think it's going to go to 107 by December, but we've got some good support down here. Now, can we get a spike? We know that the spike on FOMC day was 943. Okay, I don't think we're going to 943 unless there's like a warpath going on in those FOMC minutes, and they're about ready to you know, throw Yellen off of the bus or something like that because they're so upset. And you're thinking, okay, they're gonna raise probably, you know, 4 or 5 times at this point now, and then that would be, you know, where you'd see like a massive fall. But barring something like that, I really don't really see where we're going to turn around and completely fall off again. I think we're going to continue to move lower. It's just that I think that maybe the move lower will be where it moves lower, we consolidate, we bounce. Probably 1043 is a selling point if we move lower. Is a selling area, and then eventually work lower. I just don't think that we're going to just turn around and collapse and just keep on collapsing. What I'm saying is I don't think we're going to get something like this. I don't think we're going to get this, and then let's say we're going to turn around and then we're going to go on and get this, and then we're going to turn around and then we're going to go on and get this. I don't think it's going to be like that. I think it's more like if we get, hang on, move this thing right here. If we get a lower move, I think we're just going to go on and consolidate. If we get a lower move down here, then you'll probably get, as we consolidate, rallies to here, which will want to be shorted. Doesn't mean we can't go a little bit higher, and then we go like that. You see what I'm saying? That's, I think, is going to more or less play out. Because if you look at that, once again, I always say, you got to look at things in perspective. Like I said, my saying is, it's all relative. So the thing is if we've fallen, I'll give you an example. Yesterday, I was telling people, I was talking to some guys, and they were thinking about picking up the euro, and I was saying, hey, I think we can still go lower. And I told them, what you have to understand, just like I was telling you guys, we've been in this range. We've been in this range for 2 months. We had an upside pop here, and we had a little bounce down here. But we've basically been in this range, a little here, for 2 months. So the market is falling, like I told you, Morgan Stanley, which is like the best bank as far as whenever they call euro. But I've been at odds with Morgan Stanley. Not that I'm no big trader, but I'm saying I've been at odds with Morgan Stanley for the last 6 weeks. They've been proponents of the euro. They've been saying, okay, we're going higher, we're going higher. I'm like, no, we're not. I mean, at least that was my thoughts. And like I said, on FOMC day last month, I posted the post, the euro post. I posted it this morning on my feed, and it says euro dollar on the precipice of a downside move. And so what happened yesterday as we continued to fall, and I'm like, wow, it's still going lower. Because I was even surprised. I had already covered my shorts, and I'm like, we're already too low. I don't want to be selling the bottom. But I did get short. Eventually got short actually later in the day, and I'm already out of that position. But my thoughts were, a couple of guys are talking about, oh, this is a binary. And I'm like, hey, what you have to understand is the market is coming off now, and bulls are finally throwing in the towel. And I even said they're throwing in the towel for good. So you're having people, not only that are getting stopped out, you're getting people that are just outright exiting their long euro positions. And you have anybody that was long earlier in the morning, they're getting stopped out. The market knows that, so the market isn't going to let these people get out of jail easily. That's why we couldn't find any bids. And so we came up a little bit, And then in Asia, it tried to work a little bit higher and then quickly started selling off again. You pretty much killed all these people, like I told them. You pretty much killed all the bulls. So anybody that's here, if they make money, they're probably going to go in. My thoughts would be they'll look to exit on moves here. Now, those that have longer term positions, they're not going to get out. They're like I said, if I had these longer term positions, I'd still be hanging on because I still believe 107 by December. Actually, we're already time for break. But I was focused on the euro because of the FOMC minutes. Time for break. We'll put on the news and we'll be back in another 5 to 6 minutes. Thanks for joining us here on the Morning Edge, and we'll be right back. So let me switch that over, and then we'll focus on the other majors. I just want to focus a lot on the euro because it trades so closely with the dollar. The euro dollar comprises 56% of the dollar index. So if you want to know what the dollar index is, you just look at the euro dollar because it's an inverse relationship. So let's go and put that back, and we'll take our first break.